Yep. Now, what we're doing here, folks, is we were just up at 534. Now, we were down around that 531 handle and that pre-market gap down. The thing about it is you levered right back up. You were just above the, well, what was it? 534.71 offer. Now you can take a look. It's 533.03 by what? 93 pennies. 90 penny difference between that bid and ask. We're going into the opening bell. We're going to be watching the 1170 put on the S&P as well, because when we gap down, we're going to see if they steal premium out of here. So I'm going to take this over here out of the way. Okay, we've got the Google 530 put that we're going to monitor because it's, you know, out of the money, and we do have a 535 put. So look at this market. Look at how wide that is. Can you handle that? It's over $2 wide. Yeah, we know how to master it. I'll tell you what, that's a 536 high. Now, Brian Plain on the hip side, you make a market by throwing 20 pennies out there just to set the tone there. Now, look for the, this is your 520 call in the money, 917 weighted. And it's 1810 by 2080. And you're you're over a couple dollars wide between the bid and the ask. You would, on one, just 30 came right there. As soon as you hit it, they all track you. So go 50 and try to create a $2 spread. So go 50 pennies. It doesn't matter. Close at 9. See how they're tracking you? So 60 comes in, $2 wide. Contract it. Go 18.90. But be careful, because now take them up 30 cents on there. There you go. And they all came in. You see that? See that, folks? This is live on the opening bell. And this is what Google is doing. Now take that bid off of there. Leave them all stuck there. Because at some point we're going to make a market and we're going to work them. All right? It's 20.5 by 18.90s. You came off yours and you left the rest of them there. What did you do on the opening bell? You walked that side of the market. Let's get to the 535 put. I got a 920 low. I'm printing a 920. I already have that. So if we do reverse on Google, we are putting the low in price action 790 hit 710. Look at that 530 put on that 917 weighted, 690 below the market with an 820 high and an 870 close. We got that baby is breaking higher and a 3-minute price action bar. And this is how the call side in the money is being weighted here. And we're going to look at some other ones. It is right now. I got a 3-minute right here on it. This is that opening bell. This is that teeny action support line. That's a 3. That's a 6. That's a 9. That's a 12. And that's called exactly what I was saying. They bid popped it diamond here. Look at that diamond pop. Look at that diamond above there. Look at where that diamond came in at the very high. But look at that diamond print. We talked about that. Yes, we did. And we hit a 2170 over here on that 520 call. Here is the put side of the market making lows at 8.5. Here, as we're going through this, we can see here that the 530 put did get down to that 650 handle, and we have alarms down in this side because this is the side of the market that we're going to make, and we're going to make this side the low side, and we're going to watch some other ones as well. We made a 538.50 high, but look at that bid pop. They walked that ask price right up there, got that 520 call up at that higher price level, and we're doing quite well. And so basically, this is the way it sets itself up. This is that diamond pop. This is what we were talking about. Whether it would be to the downside or to the upside, it doesn't matter. But this is the way they're going. And this is the opening bell. This is the put side. This is the call side of that 520 that was deep in the money from yesterday's big breakout. Here it is. That's a 3, that's a 6, that's a 9, that's a 12. That's the intraday high, very low volume. Let's see if they can take out that diamond high. Let's see if they continue to drop this side of the market. I'm just including a quick thing on the Amazon call here for my MMTs. Yes, this was a 5.75 close. Okay? And this here was bought yesterday. This price continues to go higher. This price here If we don't turn in Amazon, then that means that the call side can still come down lower, but we're trying to put a bottom here. That's the opening bell on Amazon. That's the IR. I'm at 46. I'm not even going the right way for the bottom because I'm going toward 50. And I'm going toward 50, then eventually we will come a little bit lower here. I threw this in with the Google trade, and now I'm going to come off it. But you're at 0. That means that these prices can still come down. That means that the put side is gaining a little bit more value on the ask based on these diamonds dropping right here. See? Look. This is the Amazon right here. Here, 735. These are the 220 puts. And the calls, well, they're trying to hold. They printed 4 1/4, down $1.48 from the close. Still going to go lower. This is going to go higher, and will eventually start to drop down here and make lower lows. So we start to look right around that 370 handle, and whenever we do get a turn, this side of the market will put the low in, and this side of the market will put the high in. And we haven't done that yet. Talk about it. Here we go. Here's that 850 low. There's that 538.50 high. I'm going to bring up the Google chart. We were doing the Amazon one a moment ago. And we had the reversals that people would want. And what was that? Well, let's take a look at it. If this isn't a reversal, when this reversal is in play, as we were pointing it out, and then we went and did the Amazon, that was that big breakout that's in this video. And the minute that that reversal happened, that's when you start making the transactions. That's when they put their lows in. And it's all right here. 650, you got a $1.20 yield, and 810. Here's the 520 put that hits a low of 60 cents for crying out loud, 80 by 90. Why? Because of the reversal. Where was the reversal? Right here. That was the breakout that took these put options to their low entries. Was that. Once you got up here and you failed, like every day, you put the bottom in. And it's in this live video on how this side would put the bottom in and where this side was a transaction. And this is that reversal. And now you're going to find out where the low, but the high end of this is, and when you take a look at the call contracts, they're getting mutilated. There's a 530 call. Had a high of 15, now at 13 by 1340. Yes, it is. Don't tell me the 520 call peaks at 2170, down $2 on the bid, and these are almost $2 off of what? That's that 535 put. Here's your 530 put. That's your yield. That's the close. That was the drop down. That was the entry at reversal. There is the half bar. We will see now what Google does. And this is all live on Google. I did throw in the Amazon video, MMTs, just because we had a couple people on it. So we're back on the Google deal. And here we are, MMT. We're going to come down to this half price action bar on Google, but on the opening bell. It was everything that I said in pre-market. You came down, you had that big diamond pop erratically up, but then the diamonds are popping down right away to that half bar. What is it? It's here. It's now. It's 534.30. And we're going to see within the structure here if we can hold it. So we're above it. We're above half bar. There's that diamond right here. There's that trade. There's that Google. We're putting the highs in over here. Now we're going to start looking at buying the call side of the market over here. So I will have Brian Plain work a bid and ask in here. 1140 was the low. So they took a lot of premium out on the open. Huh? Yes, there is. Here is the major reversal of that breaking bar. And my MMTs, look at here. That was what you want to see, but there was no follow through. They slid that bid. Look at here. 1, 2, 3, 4 teenies. And you can see that the put options over here at that 535 continue to go higher and make higher prints based on, first, the call side made the highs, like I said, and all of these put in their lows. That's when you would be making your transactions. Here, they got to 60 pennies, and they're at $1 by $1.20 on the 520 put. Now, forget about that one. Watch this one here. That's a $2 yield. It's coming back to the closing of yesterday of 870. That's the low. So when you ran Google to the high, to the reversal, that is the side of the market that we talked about, how it would make its price action bottom as it did, and what would be the reasons why. And here they are. When they walk that up to that reversal, they take out all the value here to 850, and you make great entries when they start to, and they confirm the reversal. And not only that, breaking half bars. And this is another great example about how, and this will go with that special series of Google trades that we did yesterday with MMTs when it comes to learning how to get that low print, knowing what the mechanics in the price action opening bell would be, knowing then that they would be having that reversal and these bottoms again would be put in, and that's the side of that trade. Look at here, 60 pennies by a dollar. These were just a quick scalp is all of these are. You have to do heavy volume on these. You got to be doing like 50 contracts. Take 20 cents, 30 cents, 50 cents. These over here are putting in a higher bid above there. Look at here. We are 1070 to there. So there's your yield from the low to the high print. Okay? And that's the actual entry. When I ran that stock up, I hit that low, and I ran that stock up to the reversal, and I hit that low, and I ran that stock up to the reversal, and I hit this low. Of course, these are a different instrument. These are a 9.9 that expire tomorrow. These to be bought and sold quick right now. So let's pull this one off of here because I really don't need to see it. I'm going to put in a different call price that people need to know. And that was going to be the 235 call right here. And I'm going to move this on this side of the fence. And here's a 235 call that doesn't have much of a yield or a premium, but it's a 917 235 call on Amazon. Look at that, up and out of the money. And I wanted to put this in here for a reason. If this gets cheap enough, it's a hedge against the short. Again, if this gets down to like 25 cents ever, you would want to have that because it would be an up and out of the money in case Amazon wants to gap and run higher over the next few days or next week. If you can get these calls down here at 25 cents, that's up and out of the money. This would be a nice transaction on the Amazon. And once again, I'm throwing Amazon in with the Google because we're doing them all. Here is your 917 weighted 535 call. There's your 530 call. That's coming down to 1250 by 13. Here is the 535 call that had a close at 950, had a high of 1170. It made a bottom at 910 when Google attempted to put in a bottom, which was very weak. So here we are. We got that bottom, we got that bid pop, but there's no follow through. There's no follow through. Okay, and we did get back below half of that bar, and we're right here again. We're right here, right now. That's 534.30, and you're 534.20 by 534.52. 32-cent spread between the public. Here's our bid and ask, 02 by 06. What does it mean? It means that the 6 had to be printed to go positive up that way so that this bottom can get put in here. Then Brian Plain, since we're putting another attempted bottom in, these were 910. They got a premium of 990 by 1030. These are going up in value. Let's make a market here at 9.60 on a weighted 917 535 call on this side of the market. Okay? All right? And let's see. I know it. We're above the half bar. That's this half bar. This is that bottom. We're above it. Here. Let's just pull this part of the opening bell up. There we are. Now here, let's take this down. All right? And we're getting what we want. We're getting a 45. We're getting a positive ratio of 10. We're holding this whole half bar area here now. And that's when we hit that high, and these call put contracts are dropping in value. Yes, they are. They're dropping in value. They're 810 by 830 on it, but they're slightly dropping in value at the 535 put. It's right there. It is. Here's a bid and ask, and here's that. Okay, so when this ticks higher, you're going to have to get above this whole area. Again, you're going to have to take out this half bar on the upside. That's 536.49. You're going to have to get a closing bar above that 1, 2, 3, 4, 5 teeny breakout. 3, 5, and 7. There you go. So you got to clear this bar. That's 534.51. You have to close above it. The bid and the ask right now, it's right here. You can see what it's printing. It's printing 534.78 by 10. You're above the half bar, but it's a weak bottom. Why do I say that? Is the IR has to get above 45 and go toward 65. You got to keep ascending. The current ratio is 12 going toward 52. And here are the values of both sides of the market. 990 by 1040 and that 535 call. That's here. There's that 535 put here. Here's that call here. Here's the directional price movement here. Here's the brain. We already know what we have to do here. And that's got to go north of 45 toward 65, 75, and so on. This has got to go toward, 20 in order to clear these areas right here. You got a bent 10-minute period moving average on top of it. You have a low volume tape. You're at 1010 by 1040 here and an 810, 830 to that high with the 10 and 1040 below that low. And these other calls, they're holding right in there. Almost $1 wide here on the 520 in the money. Trading that yield 1280 by 1340. 1140 was the low. 910 here. 10 by 1040 here. Here, this has got to go north of 45. MMT, there's that bid and that ask. Now, what you want to see is you want an ascending half bar, MMT. So what do you want? You want to close above the previous half bar. So when this bar right here, it'll tell you in this column that it's 54 pennies above the I'm sorry, something happened there. I did something, messed it up. Let me open up another 3-minute chart. Here we are almost 45 minutes into the opening bell, and the thing about it is that we have hit a diamond reversal here and now. This is where we have bid popped it right back up here. This half bar will be the next one. That's a major catalyst to the upside. If you clear it, this is what you're going to be looking for. It's a 536.38 half price action bar. Okay? And the thing about it is, this is the one. That's the one that you're going to have to come up to and get above here during this knife hook. And that's 1, 2, 3, 4 teeny expansion at 53 pennies a teeny. At a 55 IR that we talked about, and a ratio we talked about that had to go up to 20. And when it did go up toward 20, then you would go up higher in the price. And it's all right here. It's all right here. And now this ratio here has got to continue to break above this half bar. You got to hit above toward the 25 and 30. You got to go up that way. Okay? And this is the teeny amount here right now. In dollar amount, $1.62. Got to take out these half bars. Here's another half bar you can consider at 536.10. And right now you're 535.55 by 83 pennies, 28 pennies wide. And it's very low volume in the print. With the 532.40 and a 538.50 on the opening bell high, that took the put contracts to the wholesale bid with an ascending ratio of negative 0.19 on that wick to a positive half delta, which equaled $4.47 there, plus the minus 163. Got to add that in there. So that's what that, it was a contraction and it was a burn. Very nice trades over here. They peaked at the bottom. They made their highs. They made their highs. They're pulling back. And these over here, well, this is the call side. Still underwater from 2170. So the people that did not sell up here MMTs like they never do, because when that thing was reversing, it was time to be scaling out of that side of the market. On all of these. On all of these. And we have bids below the market here. Right now, we're printing right here. We have a reversal bar right here. So the put options could make higher highs. Look at that 530 put. They're giving it yield. 8 by 840 with an 830 high. Look at that.